Hello, everybody, and thank you for joining me today. It's Alan Barry Labucan with the Rocks and Stocks News Show. We're having another of our weekend reports, and I've got some good companies to talk about. Before I get started, I wanted to talk about the big news on Friday, which was Powell, Fed Chairman Powell, at the Jackson Hole good conference, and one of the things that he's making the case for is that it looks like they're getting ready to cut interest rates. How aggressively, we still don't know, but it certainly sounded like they are ready to start cutting. And the biggest thing that he mentioned on Friday was when he talked about the GDP and the inflation. Inside the Fed, their members are talking about 1.2% GDP growth and 2.9% inflation. That is stagflation. Now, it's not the super problematic kind that gets everybody talking about it, which would be when the economy has zero or no growth or little growth or even dips into recession. And I think that both of these numbers are pretty optimistic on their front. If you look at the the flawed BLS numbers, the jobs market is stalling. That is without a doubt. Uh, I think that they've been overstating jobs for a long time, and the government numbers are understating the actual inflation. But we'll use their numbers, and even using their numbers, they had to come clean on the May and June reports, which were revised down at an alarming level. And then July was not much better. And I have a sneaky suspicion when that gets revised, it will be downward as well to nearly zero jobs created. Uh, and ultimately, where the jobs market goes, so goes the economy. Earlier in the year, the jobs benefited from the front running of tariffs as companies loaded up their inventories, but that has now run its course, as we can see in the May, June, and July jobs numbers. And another thing that Powell was sort of, well, not sort of, was indicating is that if you can believe it, he's kind of making the case without saying it that he thinks that inflation due to tariffs will be transitory. He used different terms, but basically that's what they're talking about, not just in at the Federal Reserve, but also within the government. Besant and Trump seem to think that this will be a short-lived situation, if any. But that's really ridiculous when you think of it. I mean, ultimately, when something gets imported, the company that imports it has to pay the tax or the tariff, which is a tax, and then they pass that on to their customers. Ultimately, I don't think it will be uh, transitory, simply because you look at how it's going to stagger into the supply chain. You look at the way that just look at the tariff tax. It's being implemented in different countries at different levels. Some are paying 10%, some are paying 15%, some are paying more. And how that moves its way into the supply chain, it's the front running kind of gave it a pause, but now the front running is over, and now companies are going to have to start building up their inventories with the tariffs included. And so you look at that, and that's one reason that the impact will be staggered. But then you look at the way that certain companies, like big companies, they were able to benefit because they loaded up their inventories. They had the financial wherewithal to be able to do that. Smaller companies, not so much. So some of those have already passed it on, and we're seeing that inflation is starting to get moving in the wrong direction, moving up again. And then you start seeing that as that fully works its way in, some companies are going to try as hard as they can not to raise their prices out of fear of losing customers. But at some point, they're also going to have to start uh, passing the tariff tax onto their customers as well. And so that's going to lead to sort of a staggered um, impact into through as it works its way through the supply chain. So the idea that it will be transitory and sort of a one-off thing, I think, is not going to happen. I think what we're going to see is that it builds up and gets more and more impactful by the day. And so, this idea that they are going to see, or that the inflation is going to be somewhere around 2.9%, I think is wishful thinking. I think it's going to be well over 3% and probably move towards what the surveys of consumers are saying, which consumers are predicting, much higher interest or inflation, somewhere around 4% or worse over the next from here over the next 4 or 5 years. And so that suggests that inflation is going to be a lot more problematic. And ultimately, if the Federal Reserve cuts interest rates, that is ultimately going to mean that they've thrown inflation under the bus. And so if they're juicing up the economy with lower interest rates, that will feed inflation as well. Another factor is that Trump wants a lower dollar. I'm going to go to the dollar right now, and that's exactly what he's going to get. But that is a troublesome situation for inflation because the U.S. is primarily a importer nation. The economy relies on imports, and if the US dollar is lower, well, then the cost of importing things are going to go up as well. So that's another staggering effect into inflation. So, I think their idea of 2.9 or 3 plus inflation is very much wishful thinking. And as this all transpires, there's no wonder that the jobs market is stalling. And if the jobs market's stalling, that means the economy is stalling. And so this 1.2% growth that they're expecting, I think is going to be proved to be wishful thinking as well. And it could get towards a recession or zero growth, or even slightly above zero or slightly below zero. We'll have to monitor that closely, but I think that what I'm saying ultimately is that the stagflation that has not caught all the headlines and not caught Wall Street is going to transpire, and that will be, very bullish for the price of gold, silver, and if the US dollar is going down, well, that'll be good for all commodities. So it's a good time to be looking at commodity stocks in particular. Before I get into that, I wanted to just highlight something on the US dollar trend here. You see that drop that happened when Fed Chairman Powell talked about it looks like they're getting ready to start cutting interest rates at their September meeting. It dropped quite dramatically and went under the 50-day moving average. Now, since the beginning of the year, since about February, the US dollar had been trading under the 50-day moving average until around third week of July. It did get above it, then came off of it and got down to the 50-day moving average, tried a little bit of a rally, and then on Friday was hammered down. And this suggests to me that this is a new trend that we'll see the US dollar below that 50-day moving average, and that 50-day moving average going down like it did from, let's say, March until about mid-July. And so this is very bullish for gold and silver and copper and platinum, palladium, other commodities that the price that everybody pays attention to is what it does against the US dollar. So if the US dollar is going down, that pushes the price in US dollar terms up. And so that's another inflationary situation when raw material prices are going up. So again, I think this hopes for 2.9% is going to prove to be wishful thinking, and we'll see much higher prices of gold, silver, copper, platinum, palladium, other materials, other natural resources. And so I wanted to, before I get into some companies, my favorite way of playing these moves in the metals is through the companies. And what we've seen oftentimes in the summertime, because these gold stocks and other metal stocks are relatively not as liquid, and people go on holidays, they tend to show some weakness. But this summer has been totally different. The gold stocks have been doing very well. It's been a strong summer for gold stocks and silver stocks, while gold has been sort of going sideways with an upwards bias of late, as you can see in the 50-day moving average. But as you see at the end of this way over here on Friday, when the US dollar was down on Powell talking about the likelihood that they're going to change their interest rate policy, gold was up $35. Silver did even better. Silver is looking very strong here. It was up from about, let's say, about 37 and change all the way up to 38.88. So that was a 2.1% gain. I think it's just a matter of days before silver breaks above $40 and makes its run towards $50, the all-time high before the end of the year. And Another thing that has happened over this summer is there's been a lot of financings done. This is also a trend that is quite different than a lot of years. Most of the 32 years that I've been in the business, not a lot of financings get done during the summer. This year that has flipped, and there has been a lot of financings done. And so what that means is that these companies are loaded up with cash, many of them, and that enables them to generate a lot of news. So I think the news flow for the remainder of this year is going to be very strong. Um, some seasonal trend. Now, most years, we see even more weakness in the last couple weeks of the summer, which is kind of like the last couple weeks of December. when people are in holiday mode and the volume drops off for the mining stocks and create some opportunities. But this year, it's been the exact opposite again. The stocks are performing very well compared to gold and silver, which are looking very strong. Gold looks like it's been basing for a few months with an upwards bias and is ready for a significant breakout. I think that's coming within days, and we'll start to see some new record highs created for the price of gold, which will be very bullish for gold stocks. Uh, I um, I just wanted to, before I start talking about the companies I want to talk about today, I wanted to mention how I look at companies because I think that the companies give you that added leverage that will significantly outperform the price of gold, silver, and other metals. And one of the key things I pay most attention to is value propositions more than technical indicators. Now, technical indicators are very important, but what ultimately drives it is the quality of a company's projects. And second, I am paying a lot of attention to a company's commitment to digital marketing. The reason for that is investors are online these days on social media, places like X, formerly Twitter, YouTube, and other social media sites, and they are looking for investment opportunities. And they have a lot of they're pulled in a lot of different directions. So if a company isn't out there aggressively telling their stories using social media, they're not going to be a top of the mind kind of company. And this tends to cause companies to have a higher cost of capital. If they're not well known, then they tend to have a lower valuation of their and a lower price of their stock. So when they go out there to do financing and issue more stock, they issue it at lower prices. So their cost of capital is higher. So if they've got a good project and they're good at telling their story using digital marketing, then you see, and then the next big thing for me is technical indicators and then people. Now, a lot of commentators sort of put people first, and I don't, because I think that you can tell a lot about the people. Everybody says that they have good people involved, but I think that the quality of a project and a company's commitment to digital marketing and telling their story and the technical indicators have a much better way of telling you more about the quality of the people. And that's why I put the higher priority on the project quality and the company's commitment to digital marketing, then the technical indicators, then the people. I tend to think that again that good people are reflected in the quality of the project, commitment to digital marketing, which is often reflected to a degree in the technical indicators and the value proposition. And so that's how I look at things. All right, let's get into some companies now. My favorite topic. So this today I have about five companies that I want to talk about that are attention grabbing to me. One of those is Amex. Amex Exploration is a sponsor of my reports, and I'm very happy to have them on a sponsor. The sponsors help me to be able to create the content I do, and for the most part, offer that for free to my audience. And so I'm very thankful to sponsors like Amex, but keep that bias in mind. Although I would say that every company I follow, regardless of whether they're a sponsor or a pick, they all go through the same filter. and I try to present them in the same sort of fashion. And so, yeah, that's getting that out of the way. So let's look at their corporate presentation. Here are some highlights of why they think you should consider them as an investor. And this is a good indicator in itself. They have spent $125 million on their property and drilled over 500,000 meters. And yet they still have a modest amount of stock out relative to how much they have done work on their property. They have a high-grade resource, 1.65 million ounces in measured and indicated at 6.14 grams per ton of gold, and 698 thousand ounces at 4.31 grams per ton of gold in inferred. At their Champagne zone, this is the cream of the crop. If you're looking for high grade resources, the Champagne zone has 831 ounces 8,131,000 ounces at an average grade of 16.2 grams per ton of gold in the measured and indicated categories, and another 128,000 ounces of gold in inferred at 9.83 grams per ton of gold. These kind of projects, high grade resource projects, there are very few that have 16.2 grams per ton average grade anywhere in the world. And I like that they highlight their pathway to mine development, their strong mine economics, the 100 or 59.7% internal rate of return after tax using $2,600 gold and an all-in sustaining cost of $807 an ounce. They're doing an updated preliminary economic assessment, and this time what they're doing is before they did one with all of their zones, this time what they're doing is they're focusing in on the Champagne zone because they have a plan to bring that first by bring it into production first by doing some bulk samples. Then they want to do a preliminary economic assessment on using mills that are in the area to toll mill it at the start, and then use the profit from that when you're looking at that kind of grade and that kind of internal rate of return, that would enable them to then build their own mill. And there's a very good chance that they could be bulk sampling their way to toll milling. So they definitely have a path to mine development, which makes that they're very unique in the developer category. As they say, they're in one of the world's most prolific gold producing regions. All of these are mines all over the Abitibi, and they're on the Quebec side of the border. You can notice that there's a patch of green here, which is your your key rock packages for these deposits. You'll notice all of these mines are in the green rock, and so that's the right age of rock. And their project actually extends from the Quebec side of the border all the way into Ontario. It's located right beside the town of Normatal, literally. Here is the main claim block where they've done, and these yellow dots represent the deposits, gold occurrences and resources. And then they've got all this ground over here that they just recently acquired, which is a coup in my opinion. Here is all the various different deposits on the gold zones on the system, and you'll notice that they're all contained within the Beaupré block, and one of them is outside of the Beaupré block. Uh, here is a here is the access road. Here's the town of Normital. Their core shed is in an old curling rink. There's the electric power. Look how close it is to the town, kilometers. I think about 5 or 6 kilometers. Here's the resource estimate, the Champagne Zone resource estimate. And this map shows you very well from a cross-sectional view of the Champagne Zone. As you can see, it starts very close to surface. This is the main Champagne Zone. Here you have the Denise pit, which is an open pit, and at the bottom of it, it looks like the Champagne Zone gets wider, and this is only confined due to the drilling. They need to do more drilling, but as you can see, it starts from close to surface and has great continuity down to about 1,400 meters. Here you can see the various different zones, and here's Denise the Champagne Zone and Denise right beside each other. You got the Upper CZ, E2, the Team Zone, JT, LSZ Zone, more over here. So the Champagne Zone will start things, but then the other pits or other deposits will be in production. Here you can sort of see the resource zones. Uh, Hold on a second here. Let me just hide this. There we go. As you can see, here's the Champagne and the Denise zone, and great continuity to that whole system. And that's really what separates the Champagne zone from many other orogenic gold systems in that it has great continuity, exceptional continuity. In fact, one of the world experts on orogenic gold systems has done a study, a peer-reviewed study on how unique that continuity is. And so ultimately, I think that this will be a future mine. It will be a high-grade mine. It's in one of the best jurisdictions in the world, Quebec, and they've got a path to getting cash out of that system. So that's the Amex story. Next up, I'm going to talk about Dryden Gold. Dryden reports, this was on August the 21st. Dryden reports 8.68 grams per ton of gold over 9.4 meters at Jubilee. Here you've got some drill highlights with that high-grade gold over 9.4 meters. Inside of that, included in that was a 20.50 gram per ton of gold over 1.3 meters and 26.4 grams per ton of gold over 1.4 meters. They had another hole with 3.41 grams per ton of gold over 5.25 meters. Included in that was 8 grams over 2.5 meters. And the company has now identified 4 gold-bearing hanging wall structures. Trey Wasser, who's the CEO of Dryden, commented, and I quote, "We are extremely pleased with our continued drill success in the Gold Rock target area. The El Oro gold system is growing in width, depth, and along strike with every drill hole. Discovering a 4th hanging wall structure at Jubilee with significant grade is exciting and adds to our Red Lake theme. Regional work is also progressing with 3 drill holes completed in a first pass drill test at Sheridan and with channel samples from Hinman now in the assay lab. With the closing of our recent financing, drilling will continue well into 2026 with an additional 20,000 meters of drilling and more field work throughout the Gold Rock camp and at regional targets. Over the next 12 months, we intend to really unlock the gold story in the Dryden Gold District," end quote. They give you some more details. So here, this is a good map because these orogenic gold systems are what are called structurally controlled. And what that means is that there's cracks in the earth, if you will, or structures, shear zones, faulting that open the rock up and allow the gold-bearing fluids to make their way up towards the surface. And they talk about D2 structures. And so you see in red here, here are some of the structures. Here's the big deformation zone. So this is the what you often find is a bigger crack, if you will, and then these secondary faults or structures that are cracks in the earth as well. And these secondary structures are really important. What I find quite exciting is that you look at these all going in the northeast direction, and then you've got another group that go in the north south or northwest direction. And at the intersection of those, look at what this is where they're finding all the juicy gold. And that's what you're looking for in this kind of a system. And that's what they're finding. This gives you a cross-sectional view of the distribution of the gold. And they're also finding a lot of visible gold in their drilling. So it's becoming quite an important discovery area. I hope that they really roll up their sleeves and get after the depth potential, because these orogenic gold systems, they have very deep roots, and it's important to follow them deeper, because often what happens is as you get deeper into the system, the grade picks up, and that's the kind of thing that could make for a very exciting situation. All righty. The next company I want to talk about is Nouvo. Nouvo had some news out that I talked about in the past, but it really helps me to tell their story. So Nouvo on August the 12th announced launches follow-up drilling to Bracemac footwall gold discovery in Matagami. Matagami is a well-known mining district for the past 60 years. The most recent operator in there was I always forget their name, Glencore. And Glencore was focused, and all past production on this was focused on base metals. And it's a 1,300 square kilometer property, has road access going right through it. There's a town right in the middle of it, and that town relies on mining. So they really want this to go back into production. It was in production until 2022. It has the mill on the property, and was kept in good order by Glencore. And so uh, the Nouveau was able to get all of these assets from Glencore. Now, down here, you see some of the deposits that they're talking about. Over here is the Bracemac footwall discovery. Now, this is a very interesting map, because here you can see the underground workings of the Bracemac McLeod mine. And the plan is to bring this back into production, because they think that this has more to give. But it was noted in the past that you can see it better in this map. So here is the VMS deposit and the underground workings, and about 50 meters over here, you see it in this gold star here, out into the tonalite rock. It was noted because there was a underground working right here, that there was a vein, a quartz vein, in that underground working, but because uh, Glencore was only interested in the base metals, they didn't pay any attention to it. They never followed it up, and so the Nouveau went in there and drilled it and in their first hole, they found a quartz vein with a whole bunch of visible gold in it. All these yellow circles are occurrences of visible gold. to find a, a visible gold in your discovery hole in a project in the Abitibi is a very exciting situation, and it's really helped their stock to go up a lot. Now the assays are pending on this hole, and then they've gone in and they're drilling a couple more holes around it but this is a brand new discovery. It's in the Abitibi. They've got a huge land package. It's got all the milling and facilities, and it's very exciting for two reasons. One is the potential to bring the Brace-Mac McLeod and other deposits of base metals on the property back into production. But now it's got this brand new gold discovery, and that combination makes it a very exciting situation. And so have a look at Nouvo Minerals. I'm a shareholder and a happy shareholder, and I am likely to be increasing my position. The next company up is a brand new company for me in the report, and they're actually not that old as a publicly traded company. Let me pull them up. Their name is my computer is not participating with me here. I'll have to stop share for a second, and then I'll go back on to sharing through this way. Sorry about this. Little bit of technical difficulties. Here we go. All right. There we are. All right. So the company is called Pacifica Silver. And on Friday, they announced that Pacifica Silver closes first tranche of $10 million private placement financing and welcomes Vizsla Silver, First Majestic Silver, Silvercorp Metals, and Eric Sprott as shareholders. So for a not a for a sort of an interesting silver explorer to have this group of companies and individuals jumping on board to finance the company is quite an exciting situation. And Todd Anthony, who's their president and CEO, he stated, and I quote, "We are grateful for the overwhelming support we have received for this financing and are thrilled to welcome several prominent silver mining companies and renowned investor Eric Sprott as new shareholders. We deeply value the trust that our new and existing shareholders have placed in our team's vision and expertise. With this support, we are eager to launch an initial 8,000-meter drill program at our Claudia project in Mexico this fall, aimed at unlocking its vast potential." End quote. So now I'm going to bring up their corporate presentation. Let's have a look at maybe uncovering why these other mining companies and some of the best are getting involved, as well as Eric Sprott. And they talk about advancing Mexico's most promising exploration project. They got a proven team, it's high grade, and it's drill ready. There's their disclaimer, some of the key points: proven leadership, resource-rich jurisdiction, past producer with vast exploration upside, fully permitted and drill ready. They're permitted for 146 drill sites. They plan an 8,000-meter program, 25-hole initial drill program in Q4 2025, so right around the corner. Project benefits from low cost and year-round drilling. They talk about a significant valuation potential and low float with high insider ownership. They only have 30 million shares outstanding, with 40% of it held by insiders and advisors and 32% held by the vendor of the project, which their stock is escrowed for 12 months post-closing. There's your board of directors. one of their advisors, Jesus Velador Beltran. I recently interviewed him. He's the VP of Exploration at Vizsla Silver, and he's a brilliant geologist. If you're interested in Vizsla Silver and learning more about Jesus Velador Beltran and his methods of going about exploration, that's a heck of a place to start with that interview that you can find on my Substack at rocksandstocks.substack.com, or you can go do a YouTube search for Rocks and Stocks News, and you'll find that interview with Jesus. Let's get down to the project. So it's in the Sierra Madre Occidental trend, which all of these show you where all the mines are. And you can see the vast majority of the mines in Mexico are in that trend. Access is good. There's a head frame and shaft. The history of the project. This is a outcropping epithermal vein that's been weathered because it's outcropping. But as you can see, it's quite a wide vein, and it continues for a long way, and there's a portal into the vein. Um, Look at some of these past grades: 7.7 grams of gold, 626 grams of silver over 1.5 meters. And that's the nature of these veins. They tend to, in Mexico, be in the mines 1 to 4 meters, epithermal veins, which you can see how they pinch and swell just in what's outcropping here. Here you probably got about a 2 meter. Here you got about a 4 meter. So it just pinches and swells, and that happens along strike and at depth. Mark Twain vein, 5.9 grams per ton of gold and 499 grams per ton of silver over 1.6 meters. The Guadalupana vein is 5.2 grams per ton of gold and 75 grams of silver over 3.8 meters. Mina Vieja vein, 7.3 grams per ton of gold and 379 grams of silver. So they got a lot of drilling to do. And as you can see here, they also have a cluster of epithermal veins, and that often happens. And sometimes these veins, this one comes to surface, but often not very far from these, you can also find blind veins that don't come to surface, and those can be very special as well. They give you an idea of the geology, some of the veins that need more work on them. And let's see here, more outcropping veins. Here you can see the shaft that was built and some of the past production. 2022, 2021 drill program. And as you can see, like all of these drill holes are pretty much limited to about a couple hundred meters. And these epithermal veins, they have boiling zones, or the zones inside the vein that have the perfect temperature and pressure to create big deposits, or they're not to create mineable deposits, are tend to be 300 meters. Sometimes they can be stacked where there's one on top of the other. But as you can see, lots of high grade and limited drilling at depth. And all of those, most of that drilling was all with vertical holes into a system where the veins are vertical. So it's not the most optimal way to drill these things, and I imagine that they're going to start doing some cross cut or some angled holes into the system and get deeper into the system as well. Here you can see some of the beautiful quartz veining and the right kind of textures that you want to see in that. It's got all the hallmarks. And that ultimately is why you get the kind of investors that this company has attracted. Here you can see the capital structure, fully diluted, 74 million shares with very high insider ownership. Here's another epithermal vein outcropping at surface that's been weathered over time. Insiders and advisors, 40%, high net worth, 28%, the gold vendor, 32%. So as you can see, that makes up all of them, pretty much all of their shareholders. Um, they talk about how they're going to go about advancing the project. So, right off the bat, even before they're drilling, I'm ready to make this a new pick in my report. And I'm probably going to be looking at getting some shares in this company in the not too distant future, definitely before they start drilling, because this is a classic success story in the making in Mexico. They've got all of what you want to see in a project like this, a cluster of epithermal veins. Some of them have very high grade in them. They're going to be cashed up and ready to roll in the not too distant future. So that's the Pacifica Silver Corp story. Okay, another pick that had news out is Sierra Madre Gold and Silver. They had their quarterly report out. They talked about in the quarter 173 thousand ounces of silver equivalent production sold during the second quarter of commercial production. So it's only the second quarter of full commercial production. Revenues of US 5.4 million in Q2, gross profits of 1.3 million. So it's a very good low cost operation that they can make good free cash flow off. Alex Langer, who's their chief executive officer, commented, and I quote, "We're very happy with results of only our second quarter of commercial operations at La Guitarra silver gold mine complex in Mexico. The second quarter generated revenues of 5.4 million and a gross profit of 1.3 million, with both numbers showing growth over Q1 2025 despite Q2 2025 production being impacted by an earlier than usual onset of seasonal heavy rains in May, which resulted in power outages with correlating plant downtime. Our operating team remains focused on fine-tuning the mining and milling processes at the site while ramping up the higher grade Coloso Mining Center, where dewatering and underground development are underway. We expect grades to increase into the second half of 2025 from development work underway at both Guitarra and Coloso mines. Following quarter end, we also closed a 19.5 Canadian million financing supported by high quality institutional shareholders. We're planning to deploy these funds in part to purchase additional equipment and implement improvements at the mine to reduce costs and increase production grades and volumes in the near term. We are also finalizing plans for a plant expansion to increase capacity up from the current 500 tons per day run rate and preparing for a significant exploration program at the East District concessions, which will include a drill program of over 20,000 meters. On behalf of the entire team, I would like to thank our existing shareholders for their continued confidence and support and welcome our new shareholders who participated in this financing. Your commitment strengthens our ability to advance our strategic goals, and we look forward to continuing to build value for all stakeholders." End quote. So very good information in there. They talked about, and I can attest to the unusually high heavy rains in this year's rainy season. I live in Mexico and in the center of the country, and we had an abnormally sort of 1 in 10 year amount of rain during the rainy season. And so it was abnormally high this year for many places in Mexico. And so they're on top of that. They're looking at more drilling, expansion of their facilities to process material. They're talking about purchasing their own equipment. Right now, they're renting, which will help them bring down their cost. Here's some of their Q2 highlights. I'm not going to go into all of them. Instead, I would advise you to go to their website and look for this news release. Their all-in sustaining costs were $30 an ounce uh, per ounce of silver equivalent. And I like to hear these plans that they're making to bring down their cost. And so, yeah, that's all the Q2 highlights from Sierra Madre. I like this company a lot. I like their how they're going about growing their production, bringing down their costs, doing lots of exploration. So I think that all of this makes them a unique junior gold silver miner with excellent growth prospects. All right. Now let's get into some updates, uh, and I'll pull up their charts. This is the Toronto listing of my one of my major gold miners. I only cover three major gold miners. Two of them are, sorry, three majors. Two of them are in gold, one of them is in silver. Agnico Eagle is my uh, gold pick. I started picking them back in early 2024 when they were down here around $64 a share. They closed Friday at $189 per share. So, that in itself tells you that, while gold was going up about 30%, they were going up at multiples of that. And so, this, in a nutshell, is why you want to look at gold miners over gold, which is the way I play gold. And so you look at Agnico Eagle, which is, in my opinion, the best in breed major gold miner. And the reason I say that is because they're a free cash flow machine. As gold has been going up, they've been making record quarter after record quarter of free cash flow growth, and that's why the stock has performed so well. And if you're like me and you believe that gold is going to go up more, and this company is such a great gold miner, this trend should continue far into the future. And those are the key reasons that I like Agnico Eagle. And yeah, I expect these next quarters to this second quarter, or sorry, third quarter. Uh, it's been sort of flatlining with a little bit of an upwards bias. So we'll see how the next quarter comes out. But um, we got another month of this quarter, so if gold goes up a lot, that'll help bring up their average price for the quarter of what they're selling it at. They're a low-cost producer. They produce it for slightly under the average cost of their peers. And they're doing things to increase their production and bring down their costs. So just a great gold mining company, very efficient, and they know how to make money. And that's what they're doing. They're increasing their stock buybacks, they're paying dividends. They're really firing on all cylinders. And as gold goes up, I believe they'll continue to significantly outperform the price of gold and the price of the index that they're compared against. Newmont is a relatively new pick. I picked them probably about a week or so before they went through this golden cross here. Back then they were trading, let's say, at about $45. Today they are on Friday they closed at $70. The key reasons that I picked them was that I think that I thought then and think now that they sold off a bunch of their non-core assets, their non-core mines. so that they could then focus on optimizing their production at their tier one mines. Now, because they sold mines, their amount of production goes down, but in the last quarter, their free cash flow reached a record level. So that's the ingredients to making Newmont have a turnaround and instead of underperforming compared to their peers, now they're outperforming their peers. You just look at they're one of the best performing stocks in the S&P 500. They started the year at about 37-ish, 35-ish, and they've doubled. So in 2025. And so the selling of the non-core assets, plus they had acquired Newcrest, which was a large mid-tier or a major, and that takes time to integrate into the new Newmont, if you will. And so that's all been sort of done now. And so now they're really in a position to do great things, and they have been of lately, and just well, since I picked them, they've pretty much traded every day above the 50-day moving average. They're significantly above it, and they're significantly above the 200-day. The 200-day is starting to trend up, and the 50-day is on a very bullish trajectory. And so all of these things combined, as well as Newmont is a sort of, when generalist investors look at gold stocks, it's a top of the mind company, as is the index, the GDX. And Newmont makes up about 12% of the GDX. So they have a very significant impact on the generalist investors' sentiment towards gold stocks. What I mean by that, I call it the Newmont effect. When Newmont is doing well and it helps the GDX do well, well, the sentiment towards gold stocks by generalist investors have get more bullish, if you will. And so I love the Newmont effect. I love the fundamentals of the company. And I think that as gold continues to perform and go up, as I think it will, into new record territory in the very short term here, I think that Newmont continues to benefit in this bullish trend that they have. Okay, so my silver major mining company is Pan American Silver. And if I had to sort of describe Pan American Silver uh, in a general sense, to me, they're like the they're like the Agnico Eagle of silver mining. They're the best in breed for the silver miners. And so, as you can see, their stock has been doing very well. I decided to make them a pick because I wanted to have, as I think that silver is about to have a breakout above $40 that moves it to and over $50 before the end of the year. I wanted to have a major silver miner for my audience. So I picked it a couple of weeks, about probably right about in here when they were trading at the 50-day moving average of about $27 or so. They closed on Friday at $32.64. This is a very high quality silver miner. And they're making very good free cash flow. They have a very strong cash position of about $1.2 billion of cash. So that gives them the ability to invest for growth at their own projects and at other projects. And recently they're taking over Mag Silver. I'm glad they're taking over Mag Silver because that was a pick, and that's been about a double since I picked them. They have a great mine well, they own 46% of a great mine near the town of Fresnillo in Mexico. They're partnered up with Fresnillo PLC, which is one of the lowest cost silver producers in the business. And that project called Juanicipio, that is partnership between Mag Silver and Fresnillo PLC, which will soon be a partnership between Pan American Silver and Fresnillo PLC, is just another great asset for Pan American Silver. And so I think that you can see that since 2024, the stock went from the lower left at about, let's say, $12 a share to 32.64. So it's significantly outperformed silver and gold for that matter. And as silver gets stronger and generalist investors are looking for a major silver miner, Pan American Silver is a top of the mind stock for those kind of investors. And I think that they've got a very bright future as silver gets much stronger. Okay, now I'm going to move into the mid tiers. Until recently, I only had two mid tiers, and I've doubled that of late. So, one of the first mid tiers that I've been following and recommending in my reports since early 2024, when they were way down here at about 1182, traded up to 2840 on Friday, has broken out of late above that 50-day moving average. This is for a mid tier. They're one of the best operators in the business. They um, they have no problems replacing their current mines with new mineable deposits. They're increasing their production. They're bringing down their costs. They're doing that with free cash flow from their operations. And the net result of that is that they're going to pretty much double their production over the next year or two, and also bring down their costs dramatically, where they'll be producing gold for a few $100s below the average cost of production for their peers. When I describe the company, it reminds me a lot of Goldcorp during the 2001 to 2011 gold bull market. Goldcorp, although they were not one of the largest gold miners, they were one of the most efficient gold miners. They were the lowest cost producer, and they produced about a 500,000 ounces a year, and that made their stock one of the best performing gold miners during that last gold bull market. And they got taken over years ago. And in this bull market, I think Alamos is this bull market's version of Goldcorp from the last bull market. And I'm really impressed with all the work that they're doing to increase their production and bring down their costs so that they will be, a small or major gold miner, but one of the lowest cost producers of gold across the board. And so that combination makes them a very attractive company. They've done really well since I first started picking them in early 2024. And I think they've got a great future for going forward. All right, so that's my premier mid-tier gold miner pick, which is Alamos Gold. My next one is a brand new pick over the last couple weeks, which is Aris Mining. Aris has a fantastic mine in Colombia. It's a low-cost producer of high grade, making for very good free cash flow. The company has a very strong balance sheet. And I used the opportunity of them recently coming down to their 50-day moving average to make them a pick. I really like the pipeline of project. I like the way their Segovia mine in Colombia is performing. And then they've got other mines in the pipeline that are of a similar quality. And so as they grow their production, and that will help them grow their free cash flow. And they're run by a very talented operator who has built very large companies in the past. And I think that this is going to be his next huge success. And yeah, I still think it's got a lot of upside. It went through the Golden Cross here in April, and the trajectory of the 50-day moving average is quite strong, as is the 200 trajectory of the 200-day moving average. So this is another company that I think will significantly outperform gold and significantly outperform the peers that they're compared against. And that's what I try to find for my audience. I'm rarely going to be getting in things at the lowest price, but I try to pick them at good prices when there's a lot of unlocked value in the company. That's exactly why I picked Eris, and why I basically needed more mid tiers for my audience, because my audience runs the gamut from investing in major gold miners, mid tiers, developers, explorers. And I only had two of those mid tiers, and I wanted to increase that. So Eris came to the top of my radar screen, and that's why I added them recently. Now, Equinox is another new addition to my current pick list, and they had a significant breakout. They were kind of going sideways here, had a upswing. This was related to them bringing their greenstone mine into production. It had some teething pains, if you will, as mines can often do early in their full commercial production. But they got on top of that. And since they put out their second quarter report, they have significantly or they've jumped up quite substantially. And they went through a change in management at the upper level at the CEO position. Darren Hall, who's a very talented miner, took over the leadership of the company, and it very quickly has turned things around at the Greenstone mine. It's quite impressive to see such a rapid turnaround. Now, another growth engine for the company is their Valentine Lake mine in Newfoundland. That's heading towards production this month. So in the next week or so, they'll be sort of turning on the lights at the Greenstone, or sorry, the Valentine Lake mine. And Darren Hall's on top of that, and I think that that is going to ramp up to full commercial production. They'll start out small, as they always do. They're basically turning on the lights on a new mine. Takes a couple, two, 3 quarters to get into full commercial production. But ultimately, when Greenstone is firing on all cylinders, and Valentine Lake is firing on all cylinders, as well as their other mines, they'll be producing a little over 1 million ounces of gold at a low cost. And so that puts them in a very significant position to outperform their peers. And now that they've broken out and they've got on top of the Greenstone mine issues, and have that performing much better, I think they've got a lot of growth ahead of them. And those are the reasons why I was ready to recently pick Equinox and put them on my list of picks in the mid-tier gold miner category. And I like their chances to significantly outperform gold and their peers in the not too distant future. Okay, my final, and bear in mind, folks, that I this is not a priority list, it's alphabetical. Orla Mining. I've been picking this company since they were about $2 or $3 a share way back here when they were just bringing their Camino Rojo project into production. And then they had a really good run here when they bought from Newmont the Musselwhite mine in Ontario. And so now they've got Camino Rojo, Musselwhite, and they got their railroad project in Nevada that recently got some important permits as well. And so they've got a very good pipeline to increase their production and bring down their costs. And recently they've been sort of trading right around that 50-day moving average. And as gold goes up and they make the fundamental improvements to the company, this is another one that I think is going to significantly outperform gold and their peers. And Orla Mining, I originally started picking it because they were at the transition point from being a gold mine developer into production. This is called the sweet spot of the Lassonde curve when they go into the second uh, run up in the life of a junior that becomes a miner. The first ramp up is called the left side of the Lassonde curve. That's when a discovery has been being made. Then they go into the development discount window as they're permitting and doing financial evaluations and funding and building the mine. But then just before they turn the mine on is what's called the sweet spot. And then they go up the right side of the Lassonde curve. And it was what gave me confidence was that Pierre Lassonde himself was a significant investor when they were in the development discount window. So it showed me that they had a great project, and Pierre Lassonde himself liked the potential for it to go up the right side of the Lassonde curve. And it's been a good pick, and I think it's going to turn into a great pick. And yeah, that's my fourth of four mid-tier gold miners, right? So now I'm going to move into the junior gold miners. And this first junior gold miner called Borealis Mining Company is a brand new company, only started trading about a year ago. It had an initial very strong performance, came back down as they often do, created the bottom of a cup, and now they're starting to go up the right side of the cup. I'm a shareholder of this company, and they are also a sponsor of my reports. And what has me excited about what they're doing right now is the project that they have was a historical mine, and it ran into some problems when gold was much cheaper. Now, and it had a leach pad, a permitted leach pad, a permitted and operating mill, and a stockpile that had never been leached. And so they brought in a contract miner recently. I think it was about here. And that contract miner is crushing the rock in the stockpile and then putting it on the leach pad to recover the gold from the stockpile. Now, this is not going to be big production like the larger companies I just talked about, but it is sort of the transition where they become a junior gold miner, if you will. It's kind of like baby steps to becoming a mid-tier and or a larger junior gold miner. And so they start out by using that stockpile, which they will keep them producing gold for most of 2026. And then what their transition plan is as concurrently doing that, they're planning to doing the economic evaluation of increasing the size of the known pits that were in production in the past. So that will run concurrently, and that will once they're finished that, they could start to bring, not even finish, maybe halfway through, they could start to bring in new material from the existing pits. Now, in addition to that, they're doing a lot of exploration to look for new pits. And I think they're going to be successful in that because the project has a 20 square mile alteration zone. And these alteration zones are very important because when the gold bearing fluids from deeper make their way up to the surface and interact with that country rock, they chemically alter that country rock. And so this is called an alteration zone. And as far as alteration zones in Nevada go, this is one of the largest and it's underexplored. And so I like their chances to find new deposits to mine as well. And so that's sort of the path to becoming a larger junior gold miner. They're at the early baby steps of that process, but this company has a very strong share structure. They have a very good, well, exceptional shareholder base. Their largest shareholder is Rob McEwen, who owns around 15% of the company. And he actually bought that position when the company was still private. He knows Nevada very well as he has his own mines with McEwen Inc. And um, in fact, I'm going to talk about McEwen Inc. next because it's a junior gold miner. And as Eric Sprott's also in, other key shareholders. They've got a very good base. On the management side, it's led by Kelly Malcolm, who cut his teeth as a geologist at the Detour Lake mine, which is one of Canada's largest. I think it's either the largest or the second largest gold mine in Canada. So he's been experienced at big mines. He was an exploration leader of a company that's found millions of ounces of gold. And one of his key advisors is the executive chairman of the company, Bob Buchan, who was the founder of Kinross. So he's got the ear and the guidance of a guy who built a mid-tier to, well, actually now they're a major gold miner. And so it's really got all the key ingredients to advance from a junior gold miner into a mid-tier and beyond. All right, next up is McEwen Inc. They were formerly McEwen Mining and recently changed their name to McEwen Inc. And I started covering the company back in 2022 at the depths here of their share price. And the reason I started covering them then and interviewing Rob McEwen on my shows was I felt that their copper project in Argentina was not being reflected in the valuation of the company. And since then, they got key investments from Newton, which is a Rio Tinto venture, and also from Stellantis, which is one of the largest gold car makers. And they came in because of the quality of the Los Azules development project in Argentina. It's one of the top 10 undeveloped copper projects in the world. It is also one of the lowest, it's in the lowest cost quartile for undeveloped copper mines in the world as well. In a nutshell, what that tells you is they've got the kind of project that the world needs. We need more copper mines due to all the demand that's coming. We don't have enough to deal with the current demand, let alone from things like electric vehicles and artificial intelligence, robots, technology, power grids. In developed economies and developing economies, we need a lot more copper mines. And Los Azules will be one of the important copper mines of the future. And I would make the case that the whole valuation of the company is undervalued relative to their interests. They own 46%. McEwen Inc. owns 46% of McEwen Copper. Stellantis, Newton, the Rio Tinto venture, and Rob McEwen own the remainder. And so another important milestone for the company on Los Azules is they're doing a feasibility study that they're expecting to come out in the third quarter. So, we're over halfway through the third quarter. So anytime now, they could be putting out their feasibility study. And this is the highest confidence level of any economic study. So I think that when they put that out, institutions will look at the company differently, as will other major copper miners. And Yeah, it will really highlight how high quality the copper project is. But in addition to that, they're also a junior gold miner. They are producing about 135,000 ounces in 2025. And over the next couple years, they're moving towards producing about 200,000 ounces of gold. The valuation, this is one of the best valuation propositions I can find in the mining space right now, because I think they're significantly undervalued just for their copper project alone. And you get a junior gold miner as a kicker, and the junior gold miner is increasing their production and bringing down their costs. And so this is a catalyst-rich company that I think has an outstanding future ahead of it to outperform a lot of their peers. And Yeah, that's the story on McEwen Inc. Sorry. My final, my junior gold miner that I'm going to talk about, I already talked about, which is Sierra Madre Gold and Silver. Um, uh, Always get this one mixed up. There it is. Okay, Sierra Madre Gold and Silver, as I talked about earlier, they're doing the work to increase their production and bring down their costs. And Yeah, they've got a very bright future ahead of them. I talked about that earlier. Stocks performing well, had a good couple days at the end of the week. It significantly broke out above the 50-day moving average just in the last 10 days or so. And That has a lot to do with how things are going on their project. This is a high growth junior gold miner, and I think it's got a very bright future ahead of it. So take a look at Sierra Madre Gold and Silver. Now, today's show is going a little longer than I had anticipated. And so my developers and my explorers, I'll do tomorrow. So this will be the second week in a row that I've done two weekend shows, one on a Sunday, and the second part is on the Monday. I'm going to try to do that early tomorrow. I'll get on top of all the developers and the explorers tomorrow. And on that note, I just wanted to go back to the gold price because I think that this recent breakout above the 50-day moving average is the start of a breakout where the gold price goes into new record highs. Uh, One of the basics is stagflation is going to be very bullish for gold and silver. The thing that's been driving it is for this bottom left to top right has been the death spiral of debt and the increased cost of servicing that debt. And this has caused the BRICS nations for central bankers to load up on gold. And I don't think they own enough gold. I think they need to own a lot more gold because it still only represents a small portion of their debt. And with the debt and the fiat currency system broken, I think that we're heading towards a new gold standard, and that gold needs to grow as far as an asset on the balance sheet of all central bankers. They need something real on there, not just debt and currency and hard money, which is gold and silver. And so now that the Fed is going to put pressure on the US dollar as they cut interest rates, I think gold is really firing on all cylinders and ready to, after this basing period, 3 month basing period, I think it's ready for another big breakout. Silver, similar story, and ready to outperform gold. And again, I'm really excited about how the gold miners and silver and gold related metals companies are performing during the summer months, which I think puts them in a great position to do very well for the remainder of 2025. And that's my story, and I'm sticking to it. As always, my shows are for information purposes only. It's important for you to do your homework, speak with your financial advisors, keep my biases in mind that, I'm bullish on these companies, I'm bullish on the metals. I have an opinion, so like anybody that has an opinion, I'm biased in that I want to be proven right. But I use my 32 years of experience in the mining business and having worked with some of the cream of the crop as far as geophysicists, geochemists, and geologists to build up my filter, if you will. And I use that filter to pick companies, can pick companies I invite to be sponsors of my reports. But my ultimate bias is that I want to be right. And so keep that in mind. Uh, and Yeah, there you go. Have a great day. Do your homework, speak with your financial advisors, and we'll talk to you soon.